Hi, everyone. Happy Monday. I am Violet Gayel, the founder of FemCity, and you're joining us today for our Monday Motivational Series. Today, we're going to talk about money. It's our part 2 to a wealth mindset, our theme for January. I'm really excited to have this amazing panel of experts when it comes to money. They're all global femmes for FemCity. And before we get started, let's go around the table and everyone share a little bit about what makes them an expert when it comes to money. Let's start off with Carol.
Okay, great. Thanks, Violet, for having me on as usual. I'm really grateful to be here. So I am a money wellness coach. My background is I am a CPA, so yes, I love money. I've worked for money for many, many years. I'm also a master NLP practitioner, so I also work with clients on the beliefs about money, on what's holding them back. So as my daughter said to me before she went back to Western, take my CPA, take my NLP, squish it together, and that's how I help people manage their money. Thanks.
Love that blend. Dawn, take it away.
Hello, everybody. Well, I've been in the financial services industry since 2005, and then in 2019, I entered the financial planning profession by getting my certified financial planner designation. And even in college, I have a BS in finance, so I've always been the money person. I always liked working with money, helping other people grow their money.
Wonderful. Thank you so much. And Stephanie.
Hi, everyone. Stephanie McCollough. I'm founder of Sophia Financial in the suburbs of Philadelphia, but I do have clients all over the country. I focus on empowering professional women to make wise financial decisions so they can control their future, because I feel the more women are in control of money, the better off the world is going to be.
Love it. All right. So you guys can see why I love this panel so much. If you're watching us live, we encourage you to ask questions, follow along. Our intention collectively is to help you navigate when it comes to money, specifically starting in 2021, right? You want this year to be more financially secure. You want to start really talking about the wealth, the money that you're putting in your pocket. So we really would love for you to join the conversation. If you're watching this in the FemCity library later on, months from now, don't feel like you can't continue the conversation. You can always tag us and comment then as well. We're happy to help. So the first question I have for our panel today is, when we talk about money, we're also, we don't really talk enough about budgeting. I know we have a couple classes in the FemCity classroom when it comes to budgeting, but my question for you guys is, what's the number one way femmes can start to budget and take control of their finances? You know, 2020 was quite disruptive when it came to finances for, I would say, 100% of the people that I know. I don't know one person who was like not affected at all. But when we talk about coming back from that, you know, kind of trying to grasp what we can control now and focus on and starting to get back into a place of having a strong connection with wealth and money, what is that number one tip about budgeting and taking control of finances that you would share for femmes that are watching today? And I'm going to start with Carol, and then we'll go Dawn and Stephanie.
Okay, thanks, Violet. So budgeting actually will help you to organize and manage your money. It's a plan that it has the projected income and it has the projected expenses in a time frame. So when I was a controller, one of the things I had to do every month was to prepare a summary report. And what I had to do, I had to list the income and notice any major differences. So sometimes major difference reasons could be new competition came into the market. Or maybe the customer paid already but decided to hold back and start later on. So if you are a service company, one thing I will caution you, even if you receive payment earlier, you cannot claim that amount as income until you actually do the service work. So for me, I'm a coach. Until I deal with my customers, I cannot claim the amount as income, because if you're ever audited, the auditors will check the dates on the invoices, and they will check the dates also on timesheets if you have it, to see when you did the work. So just be careful when you're claiming your income. I also go through and do the same thing for expenses. I go through by line, and I notice any major differences. And so sometimes what I found, expenses could be high if you duplicate an invoice, so if you enter it twice, or if you enter the amount wrong. And one thing I found as an accountant, transposition errors. So instead of entering something as 79, you enter it as 97. So you've got that $18 difference. And most times, well, all the time really, that amount is divisible by 9. So that's when you know you have a transposition error. Once it's divisible by 9, yes, Stephanie, I saw that. So by looking at your expenses, on a monthly basis, comparing it to your budget as well, it gives you that little time frame to start tweaking your expenses. Now's the time, and I always say coffee, reduce coffee spending, maybe reduce eating out, have a meal plan in place. Now when you go shopping, you just buy what you need and you forget all those sale items, because I know from experience, I get distracted and I run to all the sales items, right? So what I would say, by reviewing the expenses, reviewing your income, you also, it's a way of maintaining your budget. So it's not only developing a budget, you have to maintain it on a monthly basis. And it gives you the opportunity to make any tweaks or any changes you have to for your budget. And it's part of the financial picture. And once you get to this point, you can now start preparing on reducing debt, start with your investments, and so forth. So that's my 2 cents worth.
Love it. Thank you so much. I was, when I started shopping at Costco, like maybe 15 years ago, it's like this big warehouse wholesale place in the United States. I used to walk around with my calculator. This is before my phone had a calculator on it. And I would, because my budget was $150. And I would, as I added things into the cart, I would go ahead and add it into my calculator to make sure I would stay with it. And then eventually I started getting so good at adding it in my head as I shopped that I no longer needed it. And then I found that and then I started doing it with my groceries, because I was on a budget too for that. I would find that I would try to see how close I got to it. Like I would add it in my head and I'd get to the cash register and say, okay, I'm going to go ahead and it's going to be around $157.90, and they would they're like, what, is she crazy? But it was because I had added to make sure that whatever I put in the cart, if I got a fancy cheese, then that meant I couldn't get, Swiffer wipes or whatever it was. Like I had to really stick to and it worked. It helped me to stay in check with my monthly budget, because it was out the grocery budget and the coffee that you mentioned, the coffee every day, $5, all of a sudden it's $120 a month, So I love that tip. Dawn, any tips that you have that you want to share?
Sure. The problem I see with budgeting is that it just seems so daunting and overwhelming for people. They're like, I don't want to keep all these receipts and tracking everything. So I have a system that I use with clients to simplify all that. First, we got to find out, okay, what money do we have available to spend? That's because that's basically what budgeting is. How much money do I have to spend? So we have to know, one, pay yourself first. Ideally, 20% would be good. Then you have to know what your fixed expenses are. And then we work it through the system, and then we come out with, okay, this is what you have available to spend. Now, out of that, you're going to have save to spend. So money you want to save for short term, which is different than long term. Because long-term savings is what you're going to use to support your retirement lifestyle. But short-term savings is like, okay, saving for a vacation or for Christmas presents. Then you're going to have what you already allocated, which is going to come out of that other expense number. And then you have a little pile over here that's not allocated for anything. So you could link that up to a separate checking account and a credit card and have alerts set up on your bank and your credit card. So when you go over or are nearing that overage, okay, you know what? I got to reel stuff in. I don't have enough money this month. So instead of buying, that dress this month, I don't really need it for a wedding that's 3 months down the road. I'll wait till the next month. So it takes all the pain away. You don't have to sit there, have all your receipts. You know what you're going to spend each month. Because it's already allocated for. And what's also good too is a lot of people they don't just have one job. A lot of people have side hustles. So it's like you might get paid weekly. Then from this job, you get paid only bi-weekly, or you get paid monthly. So it's just so confusing that nobody wants to get started. So this program eliminates all that, and it accounts all your money into a monthly number. So it's much easier to manage. So that's what I would say is having a system that's easy and not daunting, because then you're actually going to start and you're going to follow. And now you're going to tell your money where to go instead of asking, where did my money go? So you're more in control. It's more empowering, and it's easy. It's kind of like just set it and forget it. And then you make adjustments all different times. And also you can use it for business planning as well too. So you have your business budgeting and then your personal, and they combine. So you have an actual number instead of trying to calculate, okay, how much do I have from this business? What could I use from this business? It just makes it a lot easier for you.
Yeah. Stephanie?
What I see is that, and I have to count myself among this, right? It just feels there's something that stops me from looking at where my dollars are going and from doing the whole budgeting thing in the first place. There's this obstacle. And what I think it is, it goes back to like the think, feel, act cycle, right? Like we've got feelings about money. And when we have to do something, or when it's like, you know, Money Monday and I'm supposed to be looking at my budget, like, oh, I feel this dread and I feel this resistance. And what I try to talk to people about is try to uncover what's going on there, right? There's some thought that's underlying that feeling. What is it? Oh my gosh, I believe that I'm bad with money. Or I know I spent way too much money at my favorite store last week because they were having a sale. There's something going on. There's some negative self-talk that's happening that often, at least for me, right? The default is like, oh, I'll just do something else tonight and I'll skip it. So I think we avoid it. And if we can get at the bottom of what's going on with that avoidance factor, it can be hugely helpful. There's so much judgment. There's so much shame and blame, especially women, that we feel around money. So if we can get to a point of non-judgment, been like, you know what? Okay, I spent more than I planned to at that store the other day. And you know what? These numbers on the page, they're just numbers. They're not judging me. So I'm going to take that action. I think it's that barrier to taking what feels like drudgery or what feels like judgment. That's the key thing. If we can get away from that and start to pay attention, just like what Carol and Dawn said, the key is knowing where your dollars are going so that they're working for you and you're not chasing them around. I do believe budgeting has this implication of that it's restrictive, but it's not. It should be empowering. But what's keeping us from doing it?
I love that perspective. I love it. So we have some love that came through. Nancy Anderson says, great tip, divisible by 9. I learned that early in my accounting years. And then I think Dina and Kristen, they must be tagging each other on the comments. So thank you so much. We're excited that you are saying there's some good money information that we're talking about. And if you're listening right now also, and you're feeling that, you know, you're not even at this place right now, much to what Stephanie was saying is that perhaps last year knocked you out emotionally, spiritually, with your connection to money, you're upside down. You know, think about just starting small. The ideal situation would be that you do feel connection, that you have control over the money. If you can't make ends meet, if you only have an extra $5 to spare, you know, start small with that control, baby steps. So figuring out how much debt you have. I know we talked about that as well, like just coming up with, you know, where are you standing right now? Knowing that truth gives you that empowerment to move forward with these tips that they're sharing. So just think of, you know, give yourself grace, forgive yourself if you made some really bad decisions in the past. And then again, going to that connection with, you know, your connection to money and your narrative that you've created. You know, I was thinking about, I think I've mentioned it to you guys before, but years and years ago, Steve and I were looking at buying quadruplexes as investments. And so in order to do that, we had to go through our budget. And we had to see like where we're spending the money to see how we could come up with this extra expense to buy this quadruplex. I had no idea. We were hosting dinners every single Saturday night. I had no idea. I think you guys know this already. We were spending $250 every Saturday hosting friends to come over for dinner in a light casual potluck, right? Even though it was a potluck, it was still costing me $250 to host that dinner. By the time I got the special little cute flowers and like the little napkin and like the little, you know, the cheeses that went with the special wine, it was $250. So I didn't realize that until I actually went to the real numbers. Because in my head, if you had asked me, I would have been like, oh, we spent $75, $50. I had to go to the real factual information, my credit card statement, my bank statements. And I was like, when I added it all up, I could not believe I had been spending that much money every Saturday. And we ended up, instead of doing that every Saturday, we used a budget and we created a once a year party for all of our friends where we actually saved money and got a chance to spend it. So we actually made some changes, but you don't know until you know and you look and you're like, oh my gosh, because in our heads, the $5 coffee is like only $5. But then at the end of the month, you know, at the end of the year, you've spent like $3,000 on coffee that you could have easily made at home and use that money to save or invest. So that leads me into, we've got some more love coming through. Laura says, so happy to see this. I'm seeking to streamline my finances this year and pay off debt. Yay, Laura, we're so excited for you. Grace says, I like that. Start small, start where you are, persist and stay on your budget. Yes, it does not happen overnight. It did not happen overnight for me. And I don't know anybody else who's like, boom, today I am so connected to money. It is a process. It is messy. It is like profound, but stick with it. And then Nancy says, always eye-opening to go through the line items. My husband and I are on tap to do that this month. The numbers don't lie. Yes. Yay. We're so happy collectively as a group. We're so happy because that's our intention. All right. So let's talk about investment, because we just bridging that over into that conversation, because that's another area that a lot of women feel disconnected with. They feel like first, they don't have enough money to invest. They haven't had that control yet with their finances. So I wanted to ask you guys, what's your advice when it comes to investing, thinking about femmes that have never invested before and are really just starting to kind of get control over their finances, because 2020 was all that. So now they're like, okay, 2021, I'm going to get connected to it. What's your advice for femmes that are really looking to start investing in 2021, even if it's small or large? How would they even start? Let's go to Carol.
So my first recommendation will be work with a professional financial advisor who has the experience, the knowledge, and the resources to provide good guidance in developing and maintaining that financial plan, right? So you'll have to, first of all, prepare a financial picture. And some of the things you will need to do is list your assets, like your car, savings, investments, and so forth. You also need to list any liabilities you may have, such as if you have a home or you may have a mortgage, you need to list that mortgage debt that's outstanding, any outstanding debts on Visa, line of credits, etc. And you need to list your income and your expenses. So once you've got this financial picture completed, now you're at a really good point that you can start planning on your financial goals. So what are your financial goals? Are you planning to buy a house? Are you planning to buy a car? Get ready for your children's education. Maybe it's a good time for tax planning as well and investment planning. So, well, first of all, you got to get your financial picture in place before you can start with your financial goals. And this is where I will say, seek the advice of someone who has the expertise in this area, because it could cut a lot of headaches and assumptions out of the game. And maybe ask your family, friends for any references, or just even visit your bank and they will help you, I'm sure. Thanks, Violet.
Awesome. Dawn, advice you have?
Oh my gosh, I love this topic. Investments is like one of my favorites because it's so simple, but everybody overcomplicates it. So my first advice is, like Carol said, work with a professional, shut off the TV, do not listen to the news, and don't listen to your friends. And then what you want to do is something called evidence-based investing. One, you're not going to pick individual stocks. You're going to hear people say, oh, I picked the stock, I made this much money. That's not a long-term thing. That's only short-term, and they got lucky. Two is you're not going to time the market. You cannot time the market. Perfect example, my wealthiest client, I manage his 401k. He called me New Year's Eve. Dawn, get me out of the market. Move me to the most conservative portfolio on Monday because I know what's going to happen with this whole election, and then put me back in on Thursday. And I've talked to this guy millions of times. He just doesn't get it. So I said, no, I'm not going to do that. You're going to do it. You have access to your portfolio and you could do that. So I compared, and then because he wanted me to call him Thursday, and I did call him Thursday, but I compared because we're in the exact same portfolio. I had the same funds as him. He lost 1.4% and I made money. So he lost his whole fee that he paid me. So that's another thing why you want to work with a professional. One, we're going to control your emotions because I don't care. Even if you're psychic, you don't know what's going to happen. Nobody does. For example, last year you wake up on January 1st. Would you have, you see, okay, now there's a pandemic. Now there's social unrest and like people are losing their jobs. What are you thinking? You're like, oh my God, the world is ending. You're going to like freak out and like, I want to go to cash. Well, if you would have done that, you would have missed the worst. You would have missed, the best time in the market because the market did amazing last year. But because if you just had this feeling and things are going to happen, you would have missed out on that. So you want to follow evidence-based investing, and evidence is basically, it's backed by research, years of research. And then finally, another thing you don't want to do is chasing manager performance. Everyone's kind of, when they realize, okay, you know what, I can't really pick stocks. I'm going to go look for the best money managers. Well, again, that doesn't work either, because just because somebody did well last year doesn't mean they're going to do well this year. So again, just keeping it simple. You don't have to complicate it. And why people, and especially advisors, and Stephanie will agree with me, is that us advisors feel like, okay, well, we can't just build somebody a portfolio and not do anything, because then they're not going to pay us. Well, you're paying us to hold your hand and babysit you in times when you think the market's going to crash or you get nervous. You want to stay in, rebalance every year, or when there's a major catastrophe. But basically, by doing nothing, you're gonna gain. For another perfect example, I had a client, a doctor. It seems like all the wealthy people kind of like they think they know it all when it comes to finances, and they're good at what they do. But so he called me in September. He's like, Dawn, I'm freaking out. In my TSP plan, my colleague, he made all this money, but I keep losing money, so I'm just sitting in cash. And I have this other money that I moved. I'm like, okay, let me manage those accounts. And I did his risk score. We had the number. I said, okay, this is where you belong. And now go do this with your TSP plan. Well, he didn't do that. And so our accounts, he's making money. He's like, wow, I made that much money? I'm like, yeah, that's why you hired me, because I'm not going to let you just sit there and do nothing. And just being afraid, waiting to know when, I'm going to wait till the market crashes a little more, or people, you can time the market. So my advice is keep it simple, invest in low cost, globally diversified, buy the whole market, not just the market, because yeah, you might get lucky, but chances are you don't want to be use luck to plan your retirement and your future. Use that if you just have money you want to gamble with, but make sure your long-term goals and everything is secure. You're not basically gambling with that money. So that's my advice.
Love it. Love it. And we do have some questions coming in. We'll ask those at the end. So I do see them. If you have any questions, keep on adding them there. Stephanie, advice.
Yes. Whenever someone says to me that they want to invest, I kind of always like take a step back. And the first thing we have to look at is, what is the job of this money, this pot of money? And sometimes investing is not the right answer. Sometimes what you really need to be doing is saving, or putting something into a high interest savings account. The difference between saving and investing, saving might not be growing very fast right now, but it's not ever going to go down. It's going to go up slowly over time. Investing means you're taking a risk. You could see ups, you could see downs. And Dawn's right. The people who are going to brag to you about their performance are the ones that happened to do well. The ones who didn't have a good year are not going to be bragging to you about that. So the key with investing is that you need to have trying to get my hands in the camera, have a long-term perspective, right? Because when you look at the possible range of outcomes, like Dawn said, evidence-based over the years, if you're looking at a 6-month period of time or a 3-month period of time, you could see a huge up or you could see a huge down, and no one can tell you what it's going to do the next 3 months or 6 months. But when you look at a 1-year period of time, a 5-year period, a 10-year period of time, historically, the range of possible outcomes is much smaller. So over the long-term investments, and I'm talking stocks, bonds, mutual funds, tend to go up. But when you zoom in and look at those short periods of time, you're going to have that wild swings, the roller coaster ride. So you need to understand, number one, do I need my money in a long period of time where I can ride out those ups and downs? And number two, do I have the emotional fortitude to go for the ride? Or do I need to hire someone to help me do this? Really, the best thing to do is, if it's long-term money, invest it and don't log on and look at it all the time. Don't even open your statements. Violet, you muted yourself.
Muted myself. I muted Carol. I'm like all over. Carol, you want to say something?
Yeah, I just want to add it to that, Stephanie. I realize the timing really is a factor, and it's really important, because when my kids were getting ready for university, I had to take out the RESP that I have for them, which is their educational saving, out of the long term and put it into the short term with the income savings plan. So very true, very true. Thank you.
Yes, people will call and ask me, should I be changing my investments? It's like, well, is it now short-term money? Mm-hmm. No, it's still 30-year money. I'm like, then no, not really.
All right, so we talked a little bit about blocks at the beginning. I know all three of you, I know you well, and I also know that you guys deal with a lot of blocks that may occur with your clients. And so my next question is, what is the most common block you see? And my intention in asking that is, I want those that are watching or listening later on to recognize that perhaps the block that they have is a common one and that it's okay. And then to have, kind of to move forward and not feel like they have no hope, that there's never a way that they're ever going to connect with money or wealth or save. So that's my intention asking that question. Carol, what's the biggest block you see with your clients when it comes to money?
Well, I see women tend to undercharge for their services because they don't think they deserve a higher price, or they even worry that the customers will not pay the higher price. So they end up charging a lower price. And some of us are really uncomfortable asking for money, even though it is owed to us. So that's something we need to get out of our comfort zone and just ask for money. The third thing I see, people are sometimes have a discomfort with having too much money. Maybe as a kid, they could have heard the sayings, money's evil, or rich people are greedy, so they try to get rid of it. And so another thing I noticed that if you compare yourself to friends and family, and these friends and family tend to operate in a mediocre attitude, you may find yourself having the same. So just catch yourself and what is it you have in your heart? What are your goals? And work individually, right? So these are just some of the common blocks that I noticed. There are lots more. So what I would say, if you've got the knowledge, you've got the skills, and you have the expectations, but your results don't reflect that, then know you have a block somewhere and you need to work with it. Thanks.
Love that. Thank you so much for sharing. Dawn, what are the biggest blocks that you see?
Well, I guess the one biggest block would be ourselves and listening to, because there's so much financial information. It's so confusing. For example, like people say, oh my God, the stock market is terrible. I would never invest in the stock market. And they don't really have any legitimate reason. Just like, oh, my cousin lost some money in the stock market. Or the biggest one I see is a block is when it comes to life insurance, because there's a lot of unscrupulous life insurance agents out there who are just in it for the money. But if you structure it properly, life insurance is one of the best tax-free tools that you will ever have used in your lifetime. It's used to create your own bank. And again, it's got to be structured properly. Like the agent's got to lower their costs as much as possible, their commission. And so you can build up all this cash and use it as a way to bank. So, and I guess another block is, just listening to conventional wisdom. If you listen to conventional wisdom, you're going to be like most people. They get to retirement and they have all their money in qualified plans. And what do we know what's going to happen in the future? Taxes have got to go up. So now they pull out all that money. They're stuck at the mercy of the IRS and the government. So they're going to take that money. It's not all yours. So I would say having an open mind and investigating things for yourself, not just because you heard something's bad or someone said it's bad. Find out the truth and really dig in deep. So that's what I would say.
Love it. Stephanie?
I think mine goes back to this negative self-talk that we put on ourselves. Like, I am bad with money. Oh, I can prove to you that I'm bad with money because last year I bounced a check and then I ran out my credit card bill and then I did this and that and the other thing. There's a whole field of research called behavioral finance. There's evidence showing that human beings, our brains are actually wired to be bad at money. So I love sharing this information. I give talks about it. Sometimes they go on way too long. But basically, the scientific evidence lets us realize that, oh my gosh, it's not a character flaw that I find this stuff difficult. It's not evidence that I'm just a terrible person, right? No, there are actually proven ways that humans are bad at this stuff. And the most distinct way I know to describe it is with the title of a book. There's a guy, Dan Ariely. Some people might have heard of him. He's been on NPR a lot. He's got a podcast. He's a professor of behavioral finance at Duke University. And his first book was called Predictably Irrational. So not only are human beings irrational about money, we are irrational in predictable ways. So stop with the blame and shame stuff on yourself. A lot of the reasons are just our human nature. So learning about that, I think, lets us kind of figure out the hacks to get around it and give ourselves a lot of grace and stop with the self-bashing.
Yes, absolutely. And the shame, that word comes up over and over and over again. I know it came up last time we talked, but I think it's important that we talk about that because I think that's the block that I see most with femmes. I'm not a money coach, but I do see that a lot when we're doing our classes where it comes back to not charging enough, that disconnect, I'll never be good with money. And so then they spiral and they're like, I'm never going to do that because it's always going to be this way. I'm never going to change. And so they don't move forward and find information like Dawn was saying, researching. So there are some questions that came through. Let me go back. I think we left off. Grace, It's always wise to have a side hustle. She said, amen. Amen. It's not based on emotion, evidence-based investing. I like that, Dawn. Nancy says, yes, know your worth, ask for it and expect it. And Nancy added, and not everyone gets to be your client. Absolutely. And there was another question here that I saw. Oh, Laura says, or is asking, I'm interested in alternative investments like real estate and cryptocurrency. What do you recommend? Anyone want to respond to that? Go ahead, Stephanie.
With any investment, I think you want to ask the same questions, right? Like, what are you expecting this thing to do? And is that realistic? So if you're expecting to buy some real estate and have it triple in value in 2 years, maybe that's not realistic. On the other hand, if you want to buy some Bitcoin and see it grow predictably and steadily over the next 20 years, maybe that's not realistic. You gotta educate yourself not only on what the instrument is that you're buying, but also what you expect it, and then see if it's realistic. And I would say, talk to some experts. I am not an expert in real estate. I have clients who own real estate, and I say, let's find someone who's really good at that. I'll tell you the questions to ask, but find someone who can advise you and really educate yourself before you jump in. You want to go into anything eyes wide open.
Love that. Great advice. Anybody else want to respond to that, or good?
I'll just chime in. Like, I totally agree with Stephanie too. Like, why are you doing this? It's because you hear, oh, you're going to get rich in real estate. You're going to get rich in Bitcoin. That's not a strategy. Again, you're reaching for straws. Use, like you said, talk to people who have done it before and are experts. Like, for example, real estate. I got into doing that. I have a rental property, and it's a lot of work too. 3 years of torture, because I basically was rebuilding all that, and it was. But now I like getting those checks. But then you don't always get those checks because you have issues. I had a $6,300 furnace go, so my profit was cut this year. Last year, I had a horrible tenant. So you got to know what you're getting into. It's not like, oh, I'm going to get all this money. Like, it's kind of like a job. So again, don't go for like get rich quick schemes. Like, make sure it's your passion and learn. Go to the experts. I myself, I'm not an expert in those Bitcoin or real estate. I wouldn't call myself an expert at all either.
Yeah, I know. We used to flip out. You guys know we used to flip houses, Steve and I, and we loved it. We loved it, and we did really well. And then we did not. Then it was like the market crashed and we were holding a bunch of stuff and we could not release it. And so, yeah, that was, we knew that, right? That was the risk that we took. We just recovered from that like 2 years ago. So it was a really bad, it was a lot of money lost. But again, you go in, we knew we loved it, but it's not guaranteed, even though it does well the first time, the second time, it's not guaranteed. It's just not. So anyway, so Grace says, thank you for hosting. The topic is on point. Marissa, we love that you've tagged a couple of your friends on this. That brings us a lot of joy. Nancy says, great topic. Wonderful. Let us know as you guys dive into this, how we can be of service more. If there are other topics that you want us to cover, we're open to that as well. Let's go ahead and close out with our panel sharing how is the best place to connect with you. So Carol, for those that want to learn more about the work that you're doing, how can Fems find you?
Carol Ward Direct. Okay, so I'm on Facebook as Carol Ward.
Dawn?
You can find me on Facebook, but also check out my website, which is DS Financial Strategies.
Awesome. Stephanie?
I have a new podcast this year or last year that I'd love for you to check out. It's called Take Back Retirement. So takebackratirement.com, or you can find us on your local apps. And I'd love feedback and looking for guests, actually, who might want to talk about their own path towards retirement.
Love that. Love that. This was so amazing. Thank you so much, everyone, for joining us. Again, if you're watching this later on, feel free to tag us. Let us know how we can be more of service to you. We'll wish you guys a great 2021 with lots of money, opportunity, abundance. Thank you so much. We'll see you guys next Monday.
Bye-bye, everyone.